What is up, everybody? Welcome back to the Crypto Sherpa channel, where I read you those cryptocurrency news articles so you don't have to. And welcome back to another live show. Thank you all for being here. And yeah, are stablecoins a concern we should be having right now? Because back in the day, like 2020, 2021, CBDCs, like that phrase was just all over the place. People didn't know what it was. It stands for centralized bank digital currencies, where each bank would have their own currency they can control, very centralized on their financial surveillance and whatnot. But are stable coins really like just taking over that factor right now? Because they kind of have the same thing where they can be controlled. Where they move, you can block accounts with them, wallets that hold onto them. So are they a concern that we should be worried about? But yeah, CBDCs got like banned. Nobody wanted them. We put bills in, no CBDCs will hit America or whatever. But no, so we still got stable coins going on. So there's a lot of rules changing. I got a couple articles here, but this show's going to really cover a lot of like basically stable coin news, which is going on right now. So let's dive right on into the article on our stable coins CBDCs. Let's go over and find out. So the boogeyman of CBDCs are nothing more than a distraction from real financial surveillance and controls threat. So, y'all seeing eye. Now, people like to refer to Bitcoin as a Trojan horse that we are going to smuggle into the legacy financial system and government. Stablecoins are a Trojan horse into our system that has already been successfully smuggled in. Now, stablecoins are heralded as some savior of the developing world, a positive escape hatch for them from decrepit financial systems and local currency risks. Well, that's the thing about traps. They have to entice you to wander into them, or they don't function very well as traps they do. Now, all of a sudden, stablecoin volume of significance happens on a highly centralized blockchain and issued through highly centralized smart contracts that are almost entirely rare, with exceptions like liquidity currently, and have power to arbitrarily freeze and confiscate any outstanding stablecoin tokens. Now, a single party, the issuer for the super majority of the tokens they have issued, can freeze and seize the funds anywhere, anyone globally. So it kind of sounds like a CBDC, but stablecoins do have that. So just be aware of that. If you're looking to take profits and not sell and move into stablecoins, it is very centralized. So just be wary of that. Honestly, I would just move it all into Bitcoin right now. But all of the stablecoin volumes of significance happen on highly centralized blockchains issued through highly centralized smart contracts. Oh, I already covered that little piece right there. Behavior associates every transaction a user makes with a single public address identifier. Now, putting their entire transactional history in full view of the world with a single glance, no UTXO clustering, no fancy analysis needed, just look at the account address. Now, to compound things even further, because of all these chains are highly centralized, there is no software to speak of that general uses that interact with that as fully validating. Now, wallets connect to one of a few highly centralized servers every time they interact with their account and associate their IP address with that account. Now, this is a trap, pure and simple. The United States does not need a CBDC. It has US dollar stablecoins, a way that concentrates all private information that could connect individuals to their on-chain activity in a few hands. Now, all it takes is one interaction with your KYC exchange or an address posted online connection to a social media account, and you're identified. So that's why we like keeping our crypto a little bit hidden. We have a separate vault in our own private non-custodial wallet, and then we move that around to other wallets. So we try to keep our vault as safe as possible. But yeah, that's how they can kind of get the information needed for you. But stablecoins are just a programmable as a CBDC. They're just as capable of implementing restrictions like expiring money or money that can only be spent in certain ways or certain places. Now, what's the only difference between the two that matters? Adoption. Stablecoins are viewed favorably and highly used, whereas most places the sentiment is very against CBDCs. And that's true because also stablecoins have been around a lot longer. I forgot when Tether was around, like when did they come out? But they were been around for a while. People know about them. They already use them. CBDCs is what's the new thing going on. But all the pieces are there. The central point of control to seize tokens, the total lack of privacy that makes a single association of KYC data a permanent surveillance mark, and the complete concentration of where the private information will wind up. all there to be snatched up and collected by the US government whenever it wants, and used to coerce stablecoin issuers into acting how they see fit. Now, these stablecoins are US proxies. They must interact with the legacy financial system, and they have to hold actual dollars and treasuries. It is necessity by how they work. They are under the government's thumb, particularly the US government's thumb, and whenever the government wishes it, it cheer it on. Bitcoin aims to be true sovereign and free money that enables anyone to do whatever they want with their own wealth. Yet we are now apparently cheering on the exact opposite of the riding of Bitcoin's coattails to the adoption in parallel. Now, what do I feel about that right there? I feel like, yeah, a lot of people who are still like dipping their toes into crypto, they really don't have a full grasp of Bitcoin. Like, that's the asset you want to hold on to. You don't want anything tied really to fiat dollars. They still have the mentality that fiat is hard cash. It's going to be the one that's going to outlast everything, still not going to go anywhere. But we know that's not true. It's changing. It's going to change. And also it's losing its value every day. Its purchasing power. Like, the dollar is not as strong as it was a few years ago. Heck, even like 50 years ago. It's not the same. So it's only happened to change, but people are still just in that system thinking they want to go back to it. But yeah, so this, I think, is a thing about miseducation of where they really want to be storing their wealth. But help me make that make sense right now. CBDCs are a boogeyman to keep us distracted from the very real threat of financial surveillance systems that already are here, and stablecoins, we should be confronting that, not sweeping it under the rug. And that's true. We shouldn't be. And I think we do have some rules or some meetings coming up that are actually putting out like a stablecoin act, which is our next article, which we can talk about right now, which is US Congress advances stablecoin regulation with the introduction of the Stablecoin Act. Lawmakers introduced a new framework that redefines stablecoin oversights by blending traditional financial controls with digital asset practices for clear, accountable operations in a faster evolving market. So yeah, so they got rules and regulations coming, guidance. They're making some changes to go on right now. But let's hear a little bit about these stablecoin acts. I think there was another one out there. We'll learn about it. But yeah, let's learn a little bit more about these acts that are being brought up, not pushed through, but they're being brought up, and we'll see what happens. But on March 26, 2025, U.S. lawmakers introduced the Stablecoin Transparency and Accountability for a Better Ledger Economy, aka the Stable Act, to advance stablecoin regulation and improve transparency for dollar-backed digital tokens. Now, the proposal outlines how dollar-backed stablecoins should be issued with requirements focused on transparency and consumer protection. Now, Congress pushes stablecoin regulation forward with the Stable Act. Now, introduced by Representative Brian Steele and French Hill, the Stable Act forms part of a broader push to build a consistent regulatory structure for cryptocurrency markets. Stablecoin issuers would need to follow financial rules and maintain clear records under the Stablecoin Act. Now, here we see a post from Mario Nafal. The House leaders introduced the stablecoin framework with new Stable Act. House Financial Services Chair French Hill, Digital Asset Subcommittee Brian Steele just introduced the stablecoin, which is a landmark bill created the first formal framework for dollar-backed stablecoins. So yeah, Representative Hill said that the bill helps clarify financial rules and protects both consumers and the financial system. After gaining bipartisan Senate support, the bill passed through the Banking Committee and is now under review on the Senate floor. Representative Tom Emmer, who has long supported crypto legislation, noted that although the House and Senate bills differ in some areas, lawmakers expect to reconcile those versions as the process moves ahead. Now, while the Senate continues deliberations, the House is refining its version of the bill. To move the legislation forward, the House Subcommittee on Digital Asset Financial Technology and Artificial Intelligence has held a hearing titled A Golden Age of Digital Assets Charting a Path. Now, here was that golden age. They said, together we can ensure that stablecoin issuers, digital asset firms, and blockchain developers can operate under fair, transparent, and there was a pic on that tweet, so this was a Twitter post. Now, this discussion focuses on strengthening the bill's foundation before a full House vote. During the White House Crypto Summit on March 7th, President Donald Trump encouraged lawmakers to pass stablecoin legislation before August 2025's recess. Still, that timeline may prove difficult due to divisions between crypto industry leaders and banks over key aspects of the bill's language. And in parallel, Emmer has reintroduced the Securities Clarity Act, a separate measure that would define how crypto assets are treated under existing security laws. Now, co-sponsored by Representative Darren Soto, the bill reflects ongoing efforts to give the digital asset industry regulatory certainty. Here's the other act that was going on. So we have the Stable Act and the Genius Act that propose different paths for stablecoin regulation. Now, the U.S. Senate Banking Committee recently advanced another stablecoin bill, the Guiding and Establishing National Innovation for U.S. Stablecoins, otherwise known as the Genius Act. So unlike the Stable Act, which outlines broad federal rules for stablecoin issuers, the Genius Act centers on defining payment stablecoins as digital tokens pegged to a fixed value and used for transactions. Now, this approach would divide oversight between federal and state regulators depending on the size and scope of the issuer. Now, the Genius Act will establish a first-of-its-kind regulatory framework for all payment stablecoins. Now, under the Genius Act, issuer managing more than $10 billion in stablecoins would fall under federal regulation. Smaller players could remain under state oversight unless they apply for a federal waiver. Now, the date is, what's going on? I just totally lost where I was in this article. It just totally blanked on me. So where are we? Under Genius Act? So here we go. The growing debate over stablecoins regulations highlight the need for consistent rules across federal and state agencies. Now, gold-backed tokens add complexity to stablecoin regulation. As stablecoin evolves, some industry figures suggest gold-backed stablecoins could see broader global use than those tied to the US dollar. Bitcoin advocate Max Kaiser has argued that countries with strained ties to the US often view gold as more stable than the dollar. A recent example is Tether's Alloy, which has the ticker AUSDT, launched in June 2024, and the stablecoin is backed by Tether Gold instead of fiat reserves. So Tether has been working on that. Now, some believe gold-backed stablecoins may gain traction in countries with less trust in the US dollar, and it makes sense. But from experiment to infrastructure, what began as just a workaround to traditional banking is now being treated as financial infrastructures. The Stable Act requirements signal that the era of informal issuance is closing, while the Genius Act offers a looser framework for limited use. Now, either path will impose real consequences on stablecoin providers, and for users and institutions, it's time to start treating stablecoins not as novelties, but as instruments subject to the same scrutiny as any financial product. Now, there have been some frequently asked questions to this, like how will the new regulation affect everyday digital transactions? Well, with the new framework, users may benefit from improved transparency and easier asset tracking. Providers will also follow clear operational rules, reducing risks and building greater consumer trust. Now, what challenges might regulators face with this oversight? Regulators must balance strict rules with fostering innovation, and they may face difficulties ensuring consistent enforcement across federal and state lines while keeping pace with the rapid market changes. And could the legislation reshape global views on digital assets? Well, by establishing uniform rules, the bill may boost international confidence in U.S. digital asset markets. A stable regulatory landscape can attract global investors and promote cross-border innovation. So that's a couple of things like just questioning going on, like how is this going to work? How's it going to play out? But so these two bills definitely are great that they're addressing the issue, because that's what we need. Because again, are we just going straight into a CBDC without us even realizing that's what we're getting into? But no, stablecoins definitely had to be addressed, and I'm glad that the team is working on it and like they're addressing the issue. And it's not just stablecoins, it's all crypto, Bitcoin, altcoins, stablecoins. So I like the changes happening right now, and we are definitely in a good place for all this happening. But so that's what's really going on with stablecoins. I do have two other articles on like the current stablecoins we got right now, like what they're doing right now. Like with our next article is about Tether and how they acquired a 30% stake in Italian media company B Waters. Now, Tether we covered the article yesterday, like with their partnership with Rumble. Like they did that partnership a couple months ago, but now content creators can get paid with Tether because Rumble rolls out their Tether wallet. So Tether is making big partnerships right now and is really popping up in the news. So let's hear a little bit about this partnership. So Tether has invested $10.8 million in Italian media company B Water, acquiring a 30.4% stake to expand digital content and support independent journalism, the firm said. So, Media stablecoin issuer Tether invested 10 million euros in Italian media company B Water. According to March 27th announcement, Tether acquired a 30.4% stake in the Rome-based media Water. Tether CEO Paolo Adorno said the company recognized the importance of independent media in shaping informed societies. Now, our investment in B Water is aligned with our vision to support technology-driven innovation across the industries, Adorno added. Now, according to its LinkedIn page, B Water is an Italian producer and distributor of films, documentaries, and series that address modern social issues as well as journalism. The company executive chairman, Guido, how would you look at that? Guido Marie Barrera. Yep, that's it. So Guido, he said that the firm's objective is to be capable of producing and distributing content across multiple platforms, podcasting, film, television, and live events with strong, diverse, independent voice, he added. And they said with Tether's entry and the technological expertise of Paolo Arduino, we have that opportunity to accelerate our growth and expand our reach both in Italy and globally. Now, Paolo also tweeted, Tether invests in Bewater, an Italian media excellence. Bewater Holdings controls both Will Media and Cora Media, and the group focuses on news, media, podcasting, content creation for Italian market. Now, I got to know personally many team members, and I'm truly impressed by their integrity, passion, and quality. While often media companies are bullied into kneeling to sponsor narratives simply to survive, Tether's investment in Bewater ensures that the group will continue to remain solid, visionary, and especially independent. And a big thank you goes to Guido Barrera, a true paladin of our shared core values. Now, this is a significant change for Bewater. Following the deal, Bewater's board of directors will be restructured to include Arduino and Tether Chief Operating Officer Claudia Lagario. The company plans to use the capital to upgrade its digital infrastructure and expand its content production and distribution capabilities. Now, the company will also expand the investigation journalism departments of the Italian podcast platform Cora Media and social media news organization Will Media. Now, Tether just keeps on investing. According to it, Tether saw profits exceeding $13 billion in 2024, with its U.S. Treasury holdings surpassing $113 billion, fueling the firm's ongoing investment drive. Now, in February, Tether acquired a major stake in Juventus FC, a major Series A football club based in Turin, Italy, during the same month. And the stablecoin operator sought to acquire a majority stake in South American agribusiness firm Adecoragro. Some of those investments have already started paying off. Rumble, the video platform in which Tether invested $775 million in late 2024, recently announced the launch of its wallet for content creator payments with support for Tether's USDT. Now, Tether and Paolo Arduino had not responded to Cointelegraph's inquiry of the time of this publication, but no, Tether is killing it right now. Like, they are making so many new partnerships. Like, they're just dipping into everywhere, and they are still like payment platform, because again, you're paying out content creators. But with this one, I'm not sure. Like, will it be rolled out the same way as Rumble did? Is the Italian media company going to have their own wallet that supports USDT? I'm just going to wait and find out. But that's our Tether news for you. What other stablecoins are coming? We know that Trump is coming out with his own stablecoin, USD1. So many companies have stablecoins. Tether has USDT, Circle is USDC, Ripple has the RLUSD, and even PayPal has theirs. And now it looks like Fidelity is having a dollar peg stablecoin as well, and it's set to launch in May. So let's go through this article. With the US stablecoin market worth around $235 billion, Fidelity is entering the space amid growing institutional interest and regulatory clarity. So Fidelity Investments, one of the largest asset managers in the United States, is nearing the launch of its own US dollar peg stablecoin. This move comes at a time when the regulatory landscape for cryptocurrencies in the US has grown more favorable, particularly under the Trump administration's friendly policies. Now, Fidelity is testing the US dollar peg stablecoins. According to the latest report by the Financial Times, the financial giant is in the final stages of testing the stablecoin through its digital assets division, Fidelity Digital Assets. Now, the stablecoin is expected to debut by the end of May and is part of a broader push by the firm into the cryptocurrency sector. In addition to the stablecoin, Fidelity has recently filed with the U.S. Securities and Exchange Commission to launch an Ethereum-based on-chain share class for its Treasury Digital Fund, which invests primarily in U.S. Treasuries and securities. Now, Fidelity's stablecoin initiative comes as the stablecoin market continues to grow, with companies like Tether with USDT and Circle with USDC holding the lion's share. The market is currently worth around $235 billion and has seen an influx of traditional financial firms eyeing the space, spurred by regulatory clarity around stablecoins. And yeah, $235 billion. It's crazy for that market cap. It's Tether has like 130 or 140 of it, and USDC just reached the $60 billion mark. So it's crazy just for those two stablecoins and their market cap size for all the cryptos out there. Yeah, it's nuts. But stablecoin innovation amid crypto regulatory shifts. It's important to note that Fidelity's involvement in the market highlights a wider trend of institutional adoption of blockchain-based financial products, such as PayPal's launch of its own stablecoin, PayUSD, in 2023. Now, especially following President Donald Trump's election, a growing number of U.S. financial institutions are venturing into the cryptocurrency-based products, owing to the much anticipated shift in policy direction. For instance, Custodia and Vantage Bank have introduced the country's first ever bank-issued stablecoin this week, which is built on the open Ethereum blockchain. And you'll notice that mostly stablecoins start off on Ethereum. It's the strongest and one of the second biggest platforms out there to build upon. But they always start off there and then eventually bleed off into the other blockchains as well, like Solana, Cardano, what are some other ones out there? Base Network, even Sui, I think, is getting on there. But Ethereum's always the main one they start with. But also, we got World Liberty Finance on here talking about a DeFi project backed by President U.S. Donald Trump. They introduced a stablecoin named USD1. The coin will be fully backed by short-term U.S. government treasuries, dollar deposits, and cash equivalents. Initially, USD1 tokens will be issued on both the Ethereum and Binance network, with future plans to expand to additional blockchains. Now, each USD1 token is designed to hold a consistent value of $1, backed by a reserve portfolio that is periodically audited by independent third parties. So that's basically what stablecoins are, if you didn't know. So it's a dollar pegged, backed by reserves in a portfolio, and it's periodically audited. But stablecoins are coming like no other. Again, like how we covered the first articles. Are they the new CBDC? Banks have their own, big financial institutions have their own, even Trump's got his own. So it's they're coming, and thank goodness for the rules that we got coming for them, because again, they just got to be looked on and not unchecked in the space. But I think that is everything I got to do with stablecoin news. Now let's talk about a bill that's about being headed to Trump's hands to sign off, because it revolves around like DeFi platforms, how they got to do the KYC or whatnot. But yes, let's go through this article of what's coming to Trump's hands soon. So this is a resolution to kill the IRS DeFi broker rule, and it heads to Trump's desk. U.S. President Donald Trump is expected to sign off on a resolution of undoing a rule that requires DeFi protocols to report U.S. tax authorities. And it's like, hey, we use DeFi because we don't want to report. So this rule should definitely be brokered, because I really don't know what they can do about it. They can go after the creator of the DeFi platform, but they really can't do anything about the platform itself, I don't think. But U.S. President Donald Trump is expected to sign a resolution overturning a Biden-era rule that requires decentralized finance protocols to report to the IRS, following the legislation's passage into the Senate on March 26. Now, the Senate voted 70-28 to pass a motion repealing the so-called IRS DeFi broker rule that aimed to expand existing IRS reporting and requirements to crypto. The Senate was widely expected to pass the resolution, as it passed a version of the resolution in early March, but the House made its own version due to constitutional rules about where budget measures should originate. Now, the House passed its copycat version on March 11th, which sent it to the Senate for a final vote before it could be sent to Trump. Now, here is a tweet out from the DeFi Education Fund, with another bipartisan majority of 70 Senate Congress have repealed the IRS broker rule requiring DeFi fronts to KYC users, ultimately reaffirming that Americans should have the freedom to decide how they transact. Now, the White House's AI and crypto czar David Sachs has said Trump supports killing this rule. Now, the rule would aim to require DeFi platforms such as decentralized exchanges to file their gross proceeds from crypto sales and include information on those involved in transactions. Now, common known names for these decentralized exchanges, you got Uniswap, you got PancakeSwap, you got Radium, which is on Solana's network, Jupiter, which is also on Solana's, you got MinSwap, which is Cardano. These are decentralized platforms where they don't ask for KYC or any information. So it is a needed platform to, like, this rule does got to get denied and built out on. But yeah, but let's continue on. Critics of this rule have claimed that it would lump the decentralized platforms with two onerous rules, which would hamper innovation in crypto and DeFi. Blockchain Association CEO Kirsten Smith applauded the Senate vote in a statement, saying that advocacy group looked forward to taking this harmful rule off the books for good. Ellie Cohen, general counsel of the RWA tokenizing platform Centrifuge, said in a statement to Cointelegraph earlier in March that the rule never made any sense and was unworkable in practice. Those opposing the resolution included Democratic Representative Lloyd Doggett, who said before the House's vote earlier this month that it was special interest exemption from IRS disclosure, which makes tax evasion and money laundering so much easier for wealthy Republican donors who have been using these decentralized exchanges. Now, he claimed killing the rule would create a loophole that would be exploited by wealthy tax thieves, drug traffickers, and terrorist financials. And oh, come on, just because you think those guys are going to be using that, those tax cheats are not drug dealers, terrorists. They want to use the US dollar. That's what they want to use further. They don't want to be using cryptocurrencies, which have a decentralized ledger, which has their transaction on there, cannot be changed or hidden. Like once they find out that's your wallets, boom, the transaction's linked. So they don't want to be using crypto for their illegal activities. So that's always been a phrase and term or subject they use like for like anti-crypto people. It's like, oh, terrorists are using it, gang members, but it's like, nah, they're not using it. That's just misinformation out there. But tax cheats, it's like, what, like there's ways to get around doing your taxes, whether you own your own business. There's different tax rules for every individual player, whether you're a business, an individual person, self-employed. It's like there's different tax rules that can benefit you if you take advantage of it. But most people live in the employee section and they just continue following those rules, so they see it as tax cheats. But no, so that's cool that this rule will probably most likely get abolished. So way to go. It makes it a little bit better in the crypto space. But that's what's coming up soon. So hopefully we'll get more word on it that Trump did sign the papers, and I will let you know when that happens. Now, lastly, speaking of decentralized exchanges, looks like Solana's DEX Radium and Radium's Pump.Fun alternative is going live within a week. So yeah, Pump.Fun pulled their platform off Radium, and they want to come up with their own swap exchange as well, kind of make themselves more independent. But now Radium's coming up with like their own Pump.Fun alternative. So let's hear about this and see how far they've gone. So Radium's team lead believes the majority of asset issuance will occur on Solana, and we want Radium to play a center role in that, he said. So let's hear more. Solana's decentralized exchange Radium says it's going live in the next week with its flexible token launch, which will address what have become user pain points in its soon-to-be competitor Pump.Fun. Now, the new platform launch lab will allow users to adjust a token's bonding curve, tokenomics, while still offering a user-friendly cookie option. Now, previously, Radium has simply operated as an automated market maker and a decentralized exchange on Solana, while Pump.Fun rapidly grew to become the most popular token launchpad due to its quick and easy experience. Now, when tokens reached a certain market cap on Pump.Fun, they used to graduate to Radium. Doing so allowed for tokens to be more freely and widely traded. However, last week, Pump.Fun split off from Radium and began graduating tokens to PumpSwap, its own decentralized exchange. Now, Tom, the pseudonymous team lead at Radium, told Decrypt that he had a gut feeling that Pump.Fun was going to make a move like this and had been preparing for it for a couple months now. Now, by creating a rival launchpad and launch lab, the program that we have right now offers a lot of flexibility for token creators, Tom explained. Now, the vast majority of asset issuance in the future is going to happen on Solana, and we want Radium to play a central role in that. Now, Launch Lab is set to offer a wide range of parameters that users can adjust for their token launch. These include the total token supply, vesting schedules, which liquidity pools to utilize, as well as various ways to manipulate the bonding curve, which is used to generate liquidity for a token before it launches for wider distribution. In fact, Radium is even toying with the idea of being able to manually drag the bonding curve on its X and Y axis, and in turn impacting several factors relating to the token. Tom says that this would display the power of the tool the team is creating, but he is unsure if the feature will ship straight away. Now, this is a stark difference to Pump.Fun, which only allows users to make aesthetic changes to tokens, giving everything the same tokenomics, bonding curve, and in many ways, this simplicity has been to the benefit of the platform as traders know exactly what they're getting into when buying a Pump.Fun token. However, Radium thinks it's time to evolve. We've talked to hundreds of teams this year, especially on the AI token side, and where they initially launched their token on Pump.Fun, and then they realized they didn't have the amount of funding that they needed to deliver on their goals. Tom explained, so I think that people will view the optionality of the launch lab as being a net benefit, but it might take some time to play out. Now, Pumped Off Fund has seen a wave of AI projects either endorse or create a token on the Launchpad as a way to fund development. However, a common pain point is the lack of control the team has over the token. Now, this can result in tremendous energy that is difficult to sustain due to a lack of capital, Lolli, the creator of AI with daddy issues, previously told Decrypt. Tom said that despite Pumped Off Fund's surge in popularity, there is still considerable friction for projects looking to create bespoke tokens. Over the past year, the Radium team has been troubleshooting for a number of projects that wanted to launch tokens that didn't suit Pumped Off Fund's simplified approach, in part prompting the creation of a more complex launchpad to address this. Now, although there is optional flexibility with the Launch Labs tokens creation process, it will still aim to provide a retail and user-friendly experience. The user interface itself will look and feel similar to Pumped Off Fund and provide a cookie-cutter token option if the user isn't keen on adjusting its parameters. And that's good because we want it to be cookie-cutter, easy, kiss, keep it simple, stupid, right? So that's cool that they're going to leave that feature and still add more functionality to it. But to continue on going, I would like to see teams benefit from the flexibility of the program. I think a couple of strong launches does a lot to really show this. Tom told Decrypt, and I would like to see users make money and tokens increase in price in a way that is sustainable and which will lead to more migration and trading throughout Solana. Now, Launch Lab is set to be part of a broader suite of products by Radium, with the first tool being the aforementioned token Launchpad, and currently the team is considering which features to go live and which to hold back. Tom also said Radium is talking to third parties about implementing Launch Lab into their products, as well as creating a liquidity bootstrap feature somewhat akin to the pre-sale model. Now, I think all products have a phase in which is you get it out there and you throw something at the wall and you see what sticks. He said, and if you're not seeing a lot of stuff stick, you pick it back up and you rebundled it and throw it out again. Now, Tom told Decrypt that he is ready to push the Launch Lab as early as Wednesday, but it is holding back to think through how the product can make a bigger splash, adding that will definitely be shipped within the next week. But I can say that the fees will be less, and the idea is to have Launch Lab be positive long-term for the space he added. So, okay, pretty cool. Radium, that's some good news there. Again, he called it. He knew, like, when you have these partnerships that go on, you know they're going to want to switch over to their own system and network. Like, where do I see that with, like, I'm sure a lot of us here in the space right now, especially the Bitcoin Ben, Crypto Club space and everything, like, we use the Exodus wallet. There used to be a Bitcoin Lightning wallet capability on there with Satoshi Labs or Satoshi's Vision. It was somebody, but then, like, some rule came out during the Biden area, and then, like, they pulled that partnership, so now Exodus doesn't have it. So Pumped Off Fund kind of did that with Radium. It's like, oh no, we want to go to our own, like, we don't want to use you anymore. But yeah, CEO realized, hey, they're going to do that. Started working on it months ago, and now, like, they're in the play where it's like, they got their own. Well, I guess we can't just go back. Well, fingers crossed we keep going. But that is our decentralized exchange news for you, and that was the last of it. Let's see, market fear right now. We are still at 33 fear. That's just one down from yesterday, so still a great time to buy. Bitcoin's holding at 87,000, so we're just kind of picking up sideways. Not much movement going on. So let's see, trending coins. We got BNB up 2%, altcoins at 8.4, and Murraybank up 10. So I really don't know these ones out there except for BNB. But that is it for you, people. I really hope you did enjoy the show. I got the new camera angle set up, and everything's going great. Oh, we got some chats in the comments. Let's see. Just want to know that's legit or not. That's why I came here to ask you. Hello. Wait, could you look at the map software, buddy? I do not know what that is. Disclosure, so sorry. But that is it, guys. I will be back tomorrow, so don't forget to hit that like and subscribe on your way out, notifications, and I will be back tomorrow at noon with some more crypto news for you. So I'll see you guys soon. Peace.